All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic. Today, we actually got a subscriber requested video. I'm looking at PDT, which is John Hancock Premium Dividend Fund, versus FOF, which is the Cohen and Steers Closed End Opportunity Fund. These are both closed-end monthly paying dividend funds brought to you by a creative name, Mr. Water Bottle. I like the name. Who would have thought of that? So he asked if I could compare both PDT and FOF. And I was like, okay, sure. I might make one down the road, so this is for you. I appreciate the thanks for the great content. I love those comments. I appreciate you guys so much for all the love that you guys give me. And so I'm going to give some love back. We have 1,030 subscribers currently, so that is amazing. Please subscribe if you haven't yet done so, and check out our other future videos. But today we're talking about PDT versus FOF. And so these are both closed-end funds, and I first want to start with actually FOF. So the Cohen and Steers Closed-End Opportunity Fund. Now looking at their fund, they're a $300 million market cap, and they return a yield roughly about 10%. We'll say 9.5%. We got to be slim on this one because PDT also has a dividend yield pretty close. So 9.5% on your money. Now looking into the fund, I'm just looking at a little overview. They pay the same distribution of $0.087 every single month, so roughly 9 cents every single month. That's their distribution. Going to their overview, they are a pretty diversified fund. What I'm going to do is download their holdings data right now, and as you can tell, they have their total market value, which is here on the right side, pretty split up between a lot of different funds, ETFs, and different companies. But one thing I would say about this fund is it's a little bit difficult to understand what they really invest in because it is all over the place. You can see iShares of the Russell 1000, you see the SPDR Gold Trust, Adams Express Co., which is equity funds. So as you can see, their sectors are a lot of equity funds, fixed income funds, commodity funds, things like that. I'm not super familiar, even municipal funds. It just seems like a bunch of really random companies and sectors. I'm not really sure too much upon what a lot of these are, like Voya Global Equity Dividend. These are, to me, a bunch of just random, probably good paying dividend stocks or funds that they hold, and they do hold a lot just to be diversified. So one thing that is really good about this fund is that if you are going to hold it, then you are probably going to be very diversified. It's just, what are you really diversified across is what I'm trying to understand with this fund. It's a little bit difficult to understand. And just going back to their overview, I'm just going to look at their past performance. So if you were to invest over the past 10 years, you'd receive a return of about 4.39%. That's linked to the index. We'll say about 6.7% for FOF in terms of their market price. And that's comparing to the S&P index, which returned a 13% return over that time period. Now, looking at their stock price, you could tell that they are pretty flat for the most part. They did go down. That was because their inception was at that peak out in 2007, hit that recession, and then they were pretty much flat. So if you are buying into FOF, you're not really going to get too much stock price appreciation, but instead you're going to just receive this 9.56% dividend. So that's a little bit about the Cohen and Steers Closed-End Fund. Now we're talking about the John Hancock Premium Dividend Fund, PDT. Now, this fund has a similar story. It has a little bit of appreciation going back all the way to the 1990s till today, but not much. As you can see, it's pretty much sideways. So don't expect much as well in terms of the price appreciation, but instead just expect this dividend at 8.66%. So a little bit coming at 1% lower than FOF, but I'm going to show you why I actually do like PDT a little bit better than FOF. And just a little side note, I do have another fund in here that I honestly would kind of recommend over these two, just because these two are okay, but their stock price being stagnant and at the same time being a little bit difficult to understand FOF. I can't understand PDT though when looking at them. So they are close to a $600 million market cap. And going into their holdings, if I can find that, what I do want to show you is actually this first. Before we do that, is a 10% investment back in 1990 would have got you $116,000 in today's currency. So that's actually pretty solid it's a decent return on the investment. That's going off of the 8.6% dividend yield and the slight stock appreciation of that time. Now, going into their holdings, or just even looking at their overview here, it says typically investing at least 80% of net assets in dividend paying securities. So they are a high current income consistent with modest capital growth. They are looking for a little bit of capital growth, but for the most part, that dividend income, and they are seeking income from both dividend paying preferred stocks and common equity securities. So just like FOF, they're also looking for those equity securities, but they're also, with PDT, they're looking for some dividend paying preferred stocks, not just those common equity securities. I find PDT a little bit easier to read than the other stock, which is FOF, just because it does have some common stock in here. I'm not sure if I can find that for you guys. I did see, oh yes, this is where it is. This is what I want to show you. So this is kind of how they are diversified across all different sectors. So as you can tell, they're heavy in utilities, coming in at 47%. They are across in U.S. government bonds, it looks like, or the U.S. government. I'm not sure if those are bonds or not. Don't quote me on that. But close to 1%. You can see energy takes up a big portion at 11%, financials at 33%, and then the rest, just little hints there and there, in communication services and consumer staples. So that is their diversification across this fund. Out of these two funds, I would definitely go with PDT, the John Hancock Premium Dividend Fund. But one that I might actually recommend over, I hope Mr. Water Bottle, the guy who suggested this video, isn't too cheesy with me, but I would rather invest in SPY. Why would I do that? It's because it is a diversified fund. It's very easy to understand what they invest in. They pay a monthly dividend just like the others. They pay a little bit of a higher distribution, but honestly, even if this distribution was a little bit less, I would probably settle for that over these two, just because looking at their stock price and history, they have appreciated over time a lot better than PDT and FOF, and their fund is a lot easier to understand. Now, I just want to show you their stock price and their recent chart just to show you a little background on them. So as you can see, they were incepted in August of last year, dropped down to about $45, but held a steady incline from that time. And they are actually a closed-end fund just like the other two. But looking at their holdings, very simple to understand. As you can see, they're pretty diversified, going like across consumer cyclical, financial services, healthcare. As you can see, technology makes a big portion, but that's really the only massive portion, because they're looking at investing in Apple, Microsoft, Amazon, Nvidia, Alphabet, Tesla. These are all names that are easy to understand. Sure, some of them make up big percentages, but I think Apple stock is pretty safe, Microsoft as well, and Amazon. This is why I would actually prefer to go with SPY over the other two, just because it's much easier to understand than these other two closed-end funds. They kind of give a mixed representation of what they invest in, just saying they invest in equity funds, and I don't really understand them fully, and that's why I would definitely go with SPY as my main choice out of the three. But if I were to choose between those other two, I'm going with PDT all day long. All right, I hope you guys did enjoy this video, and you enjoyed my comparison of PDT and FOF. I can't show you that now because I switched to SPYI. And I hope you guys, did enjoy this video. Please do subscribe if you found value in this video, and give this video a like. Also, check out a bunch of our other videos. There's a bunch of amazing videos and stocks on here that are going to give you high dividend yields, even higher than this 8.66% and even higher than the 12% on SPYI. So do check those out. All right, I hope you guys did enjoy. Please take care till next time, and I will